All right, so I'm on to working's done, on to the actual first thing I'm asked for here, which again is a balance sheet. Okay, that's the statement which is going to give me the profit and loss. Because the reason I'm doing the balance sheet here is I don't have enough information yet to come up with the profit for the company. So I don't have the information I need to prepare a trading profit and loss account. What I'm going to do is prepare a balance sheet, and then the missing figure from the balance sheet, the only number from the balance sheet I don't have is the net profit or net loss. Once I have that, I will start doing a profit and loss account, and I'll kind of use that net loss, the final figure in it, or net profit, and kind of work back to give me a full, or as full a profit and loss as I can. Okay, so you're kind of very much kind of working backwards here, and starting with the balance sheet. So standard issue balance sheet. So I've got goodwill. So yeah, intangible fixed assets first up, because I calculated goodwill as being 28,000. That was the first thing I did. So your goodwill is 28,000. Your premises, remember 812 at the start of the year, but I added on 450 during the year. There's no talk of any depreciation or anything like that, so just put the 1262 straight in. Next up, then that's it for tangible fixed assets. So next up is your current assets. So let's just go straight to the end of the question. I've got stock of 47,600. I've got debtors of 36,400. So the stock is 47,600. The debtors 36,400. Add those together. It's 84 grand. There's no other current assets. Then I have got less creditors due within 1 year. And again, I'll start at the bottom of the question. So you've got your trade creditors of 3,500. You've got electricity charges due, so an expense due of 350. You've got a bank overdraft, so it's going to be a creditor. What else now? Yeah, so I had interest due. So I calculated interest due of 19,600. And remember, I also split the loan up into what's going to be paid in 16. So what's due next year is 43. So that's going into creditors due within 1 year as well. So interest due and loan repayments due. So interest due is 19,600. Loan repayments due 43,000. Add those together and you get 68,950. So your current assets take away your current liabilities then are 15,050. So that's your net current assets, and then intangible fixed assets plus your premises plus your net current assets are going to give you 13,05050. On to our finance buy then. So you've got creditors due after 1 year. So all the other loan repayments, so bar those two that are being paid next year, is 473. So loan 473,000, and you've got your capital and reserves. So you've got your capital at the start of the year. So that was the 854. So the purchase price for that business, that's the money that the owner's putting in at the start. So 854 is your capital at the start. Then remember so there was like a 20 grand, 20 grand inheritance that the owner put into the business. So that's capital introduced. So my capital introduced was 20,000. Normally you'd be adding on your profit here. As I said, the profit is kind of the plug figure. It's the missing number I'm going to fill in later. So I will kind of put it down here where it's maybe easier to calculate. So just less drawings here. So just be careful you catch all of these. So what drawings did I have? First ones I found, I think, were this 12,000 here. So that was, to pay the daughter's college fees. So 12,000 plus 10,800. That was, I think, taking goods out, and then 6 grand taking cash out. You could gather all these up in a working as well if you don't want to do it in brackets here. It'll be tight enough for space, I'd say. And then the insurance 1650 and the interest 7740. And then light P as well, so 2790. So all of those drawings added together give you 40,980. And remember, drawings gets taken away there. So those numbers give you 833020. So just add those together with the loan, and that adds to 1306. So doesn't balance yet because I haven't put the profit or loss in. So that's going to be the balancing amount to make the financed by equal to 1305,050. So my finance by is actually higher than the total net assets up here, so I must have a net loss. I must subtract something from this to get 1305,050. So just subtract those two numbers from each other. So 1306,020 take away 1305,050 is 970. So you've got a 970 net loss this year. And that's your capital employed then. Okay, so the balance sheet here lets us figure out, in this case, a net loss of 970. Okay, so you call it the net worth method because we kind of, I suppose, have the net worth, what the business is worth at the start of the year, and then we look at what's the business worth at the end of the year, and if that has increased or decreased, that must be a profit or loss, increasing it or decreasing it, because that's the missing figure. Okay, so I'm going to have all the information about assets and liabilities at the start of the year, same at the end of the year. So what is increasing or decreasing the worth of the business must be a profit or a loss. Okay, so that's the kind of principle behind this. What I'm going to do now is use this kind of gross profit information and some other information I have about expenses to kind of do the fullest and best profit and loss that I possibly can, given the limited information that I have. Okay, so that's the balance sheet done. That's the thing I'm asked for here. And now on to do the trading profit and loss account in a separate video.